Welcome to another Forex trading video. When I say Forex, we also trade indices, gold and oil. So we're going to keep this video the same as the format of all our previous videos for those of you that are new to the channel. Last week we identified maybe 5 or 6 Forex pairs that we were watching that were at an area of interest, a point of interest, POI. So we identified those 6. So in today's video, we first cover, did we take any entries on those positions? Why did we take the entry and where did we enter? So we will cover that in today's video. And then the last part of the video, we go through any potential setups that we are looking at for next week. So the video last week was titled something along the lines of 3 Forex pairs that are about to hit a 52-week high or low, time to buy. That is our strategy. We look for markets that are overextended, that are about to hit 52-week highs or lows at round psychological numbers, and only then we start paying attention, and that's where we look for entry signals. So to save you time from watching the video from last week, if you've never done so, I've got some screenshots here of all the pairs that we were looking at. So the first one was AUD CAD. And you can see here in this image, we were looking for it to get to the 93,500 area. And we were looking for entry signals in this area. So as you can see here, 93,500, we got into this area. So this is where we started paying attention at 93,500. It's a round psychological number. This is where we had our alert set. Now, we don't enter off the back of that. We drill down to the 15-minute time frame and we look for an entry. So if we zoom in, we can see here we had this big engulfing candle, then we entered here. Again, we're going back through this round psychological number of 93,500. We hit up here, we'll just get an arrow. So you can see we hit the area of the 52-week high. We hit the area around psychological number. So we're building up confluences here. This is 2. And then this big engulfing candle. We entered here. This was a great trade. So we'll come back to the 4 hour and see how it played out. So we're in this trade for, I think it was about 3 days. We entered it on the Monday and we exited it on the Thursday. So 3 or 4 days. That's typical for my average trading day. Actually, my average trading day is 23 hours the last time I looked. But I do a lot of intraday trading as well, and swing trading. So I've got more than one strategy. But for this strategy I'm showing you just now, it is about 2 or 3 days is the average time I'm in a trade. So that was a great trade there. It was a 4-to-1. You can see it did go into quite a bit of drawdown. But yeah, we just placed a trade, walk away and leave it to play out. You don't sit and watch these things because they mess with your head and you will end up checking out here before you lose your total amount, or you maybe check out here when you're in half the way profit. But you need to just stick with your analysis. And the reason I thought it was going to go down to here, I thought it was going to come down and test these kind of low points here, but I was conservative. Rather than having it down here, I just pulled it up here because I was happy with 4-to-1. And you can see it did actually go down a bit further, but 4-to-1 is fine for me. I just walked away and left this trade to play out. If I win, I win. If I lose, I lose. So the next pair we were looking at was the Australian dollar US. So we're looking for it to get to this area of 0.69605. And if we just open up this pair, you can see it did get to this area, and I was actually watching it because I've created this little box, because in the lower time frames This is resistance, because you can see here we've got 4-hour candles. So it's 1, 2, 3, 4, 5 times it's hit this zone in 4-hour candles. So on the lower time frames, this would have been a big resistance zone. So I could have took this trade. I was watching it. Why did I not take the trade? Well, I was already in Australian dollar CAD, and if you look at both of these, they move the same. You can see how they move the same. So I was already in one trade, and it's just a rule I've got. If I'm in euro dollar, I won't enter a GU either, because the Great British Pound and the euro move pretty much the same against the dollar. So this is marked red here because it was a trade that I never took. But again, it would have played out. As you can see, it's the exact same as this. It would have been a winning trade. So that was kind of 2 out of 2 with our analysis so far. So the GU here, we were looking for it to reach this zone of 134. If we open up the screenshot, you can see here we've got 135 marked out, and we've got 134 here, which is a 52-week high. So as you can see, it hit the 52-week high, but it never quite triggered my 135 zone or just before it. There's still a bit of distance. Again, I was watching this, created this little box. It's creating a lot of resistance. This could be classed as a major resistance on the lower time frames, but we decided not to enter GU because we never hit this zone. And I think I was already in a couple of trades as well when I was watching this. They were playing out fine, but I decided I don't like to be in any more than kind of 2 or 3 trades at the same time. So that was GU. So the next trade was Euro, Australian dollar. So as you can see here, we're coming down to this area here. So this area is interesting. It's a round psychological number. It's also a support zone, which is this grey box here. And it's also, excuse me, it's also at a 52-week low. So if we get everything aligning up here, we've got 3 confluences here aligning up. So we entered this trade. We're actually still in this trade. So this is still an active trade. We entered the trade on Tuesday and we're still in it today. So this will potentially be one that will play out over 7 or 8 days. If it's going to reach the target, I would say it would get there next week at some point. So this is the reason why we entered here. So let's look at the screenshot of Euro AUD that we discussed last week. So as you can see here, we're coming down to this zone and we're coming down to the 160 zone. This is where we said we would enter. And yeah, so obviously we don't enter exactly on this zone because we need to drill down and look for an entry signal. You can actually see here on the 4-hour time frame at this engulfing candle, just right here, with this big bullish engulfing candle. And if you drill down to the 15-minute, you can see here it was exactly bouncing off this support zone. So that's a perfect entry there, and it's a trade that's still playing out, so it's still active. So the next one was Euro New Zealand. So this is a great trade actually to show here. So let's open up the screenshot from last week. Euro New Zealand. 175 was our round psychological number, which was just below the 52-week low. You can see this orange, yellowy dotted line here. Sorry, this is our alert here, the dotted red line. This is a round psychological number, 175, and down here is the all-time low, or 52-week low. So that's where we start paying attention and looking for entries. So if we come down, you can see it bounced exactly off 175. We never entered off of this. The reason why we were apprehensive is because I wanted to enter this trade in this kind of zone here. somewhere in between the round psychological 175 and the all-time low. I felt that this may even come down to the 174, and there was just too big a gap here, too big a stop loss. But we were monitoring this trade, and what we've seen was it broke structure. So as you can see here, if we go to the 4 hour, you can see here it's creating a resistance zone here, a structural zone, and then it breaks right through it with momentum. You can see the big momentum candle there. So if I drop back down to the 15 minute, you can see this is the area where it broke the structure. So it's respected it here. Again, we'll put an arrow here so it's easy to see. So it respected this area, this area, this area, again here, and then here it makes an impulsive move through it. So this is the reason why we entered this trade. This was another great trade. It was a 3-to-1 trade. We never really went into much drawdown here at all. So again, it's just using context. Ideally, this would have been a trade that we wouldn't have took because it never reached our zone here. But I know from previous 175 it itself is a round psychological stronghold number. So that is the reason why we were really paying attention here. And yeah, it could have went down to 174, but the fact that it came back up here, it was making higher lows. You can see here, made a higher low, broke structure. So that was time to enter. And our take profit was this area here. We were targeting just shy of this area here, and you can see it actually went right through it. So that was another really good trade. This trade was entered, I believe, on Wednesday, and we exited this on Friday morning. So that was another trade here. So the next one was the New Zealand dollar, US dollar. So you can see these little grey boxes I'm creating here, saying that it's, making double tops. It's creating a little bit of resistance here. So this was a trade that we entered on Monday, and we exited this on the Wednesday. If we come to the 4 hour, again, we'll look at context from last week. So we're at this 64 area here, which is I keep saying all-time high, 52-week high. So you can see here, 64, it's a round psychological number here. So we'll close this down. So that was on the video. If you, by all means, go and watch the video from last week. You'll see this is the exact screenshot. This is our area of interest, 164. We hit it 2 or 3 times here, totally respecting this area. And if we zoom in, we can see that we had an engulfing candle here. This black engulfing candle, this bearish engulfing candle. And we were aiming for this point here, these low points here, and it actually went further. But we got almost a 3-to-1 trade here again. This is a pair that we've done very well on recently. You can see with 2 previous trades here. So that was the New Zealand dollar. The next one was the crude oil. If you have been watching this channel for a while, you will know that oil is my safe place. This is where I go. You can see all the successful trades we've had here on oil. This year it's been our best asset. Now here you can see we almost got stopped out here. So there's really no context behind this trade in particular. We were in this previous support zone, but also the news of what's happening in the world today in the Middle East. We just had a feeling that $71 was way too cheap for oil. When everything in the world is stable, that is still a cheap price. So this was an excellent trade, and we anticipate this is going to go even higher. This could potentially, depending on geopolitical events, this could go up to as high as 90. But yeah, we'll stay in this trade for the time being. Oil. So let's look at last week, we had 2 setups that we never took, but you can see both went in the direction that we said. We predicted this was going to go down, and it did. We just never entered because we never had a perfect entry signal. GU, exact same thing happened. We just never entered this because we were in several trades already. AUD CAD, we entered this trade, you can see, so that's a successful trade at 4 to 1. Euro AUD is a trade that we're still in. Euro New Zealand was a 3 to 1. New Zealand dollar was almost a 3 to 1, and we're still in Brent crude oil. So we had 1, 2, 3 successful trades. We had 1 trade that we're actually still in, and we had 2 trades that we never took. But ultimately, 1, 2, 3, 4, 5, 6, 7, all 7 were correct. They were all correctly identified, and they went in the correct area. So it was a great week last week, and it gives you a lot of confidence as well. I remember I used to kick myself because I never took these trades and they went the way I said, but you just need to take it as confidence. Yep, it never went, you never got profit from it, but it did go in the direction that we predicted. So that gives you confidence moving forward in the markets. So next week, we only have 1 pair next week that we're looking at, and it's Euro, Great British Pound. Now, this is very important to say. Trading is not a game. Trading is not for excitement. Trading is a business. You need to preserve your capital. If you're looking for fun, you're in the wrong place. And if there's no setups, there's no setups. So this is the perfect example here. I am looking at 1 pair. What's the likelihood that this is going to line up next week? Who knows? But the fact is, if it doesn't line up, then there's nothing else with this strategy. There's no other trading opportunities this week with this strategy. And this is something we just need to accept as traders. Sometimes there just isn't going to be a trade. So if you're just going to go and gamble, then you may as well just, it's like a casino. You're going to lose money. The casino always wins. You need to have a strategy, and you need to stick to that strategy. And if there's no setups, there's no setups. I have previously, I've been doing this for years, and I've had a period, I'd be lying if I said the exact figure, but I think it was about 3 weeks where I never had a trade because nothing was overextended. Nothing was hitting those 52-week highs or 52 weeks lows. So with this particular strategy, I never had a setup. And that's something you just need to accept and wait and preserve your capital. It's all about not losing money. If you don't trade, you're not losing. So there's a stat out there that says, 76% of people at trading fail. I've seen a figure as high as 90% of traders fail. So if you're not trading, you're in the top 10% because you're not losing. And that's the way you need to look at it. You need to only place a trade when everything aligns, when you have an triple A plus setup. And if it's not there, you don't trade. Now, personally, I've been doing this for years, so I may trade next week on different strategies where I'm in and out on the same day. But for this particular strategy that I am teaching, there's only 1 setup, and it's on Euro Great British Pound. So you can see here we're coming to around psychological number, which the Euro Pound really does respect round psychological numbers if you look back in the chart's history. But it's infamous for going sideways. So when you enter a trade on Euro Great British Pound, chances are you're going to be in the trade for well over a week, potentially 2 weeks. So we've marked this area out here, saying 83. This is where we're going to start paying attention. This is our point of interest. Only when we get here, then we will drill down to the 15-minute time frame. And as you know from previous videos, we're looking for engulfing candles. We're looking for big wicks or big tails, big rejection wicks on the 4 hour, big rejection tails on the 4 hour. We're looking for break of structure on the 15 minutes. So the strategy is, this is a point of interest. When we get to this area, then we need to, we don't just enter a trade blind. We look for confluences. We look for the big wicks. We look for the big tails. We look for big engulfing candles, breaks of structure. So that's your entry criteria. So I've said in a previous video, break trading down in your head mentally where you have a POI or an AOI, which is a point of interest, an area of interest. That can be a support zone, a resistance zone, a round psychological number, a 52-week high, a 52-week low, or 100 other things. It's just at an area where you're now going to pay attention to look for an entry. If you're not in that area of interest, you're not even looking at that pair. You're not even paying attention to it because it's nowhere near an area of interest. So who cares what it does? So here we're looking for an engulfing candle, big wick, big tail in this red area, showing that we're rejecting this 83. We've also marked a second area down here at 82,500 because this might go down further. So this is potentially a trade where I would enter here with a tight stop loss, and then if it didn't go my way, I would take the loss, and I would look at potentially entering again here and potentially again down at 80, 82. And I've done it this way because I would potentially just stay in this one trade and this stop loss would be away down here. So when I'm in at 83, if this goes down to 82,500, I would enter again. If it went down to 82, I would enter again. That's called hedging, and it's probably for another video. That's why this probably scares people and they'll go in with too big an entry and this stop loss is massive, so they can't understand. So there's a whole different element to hedging. You would really split, let's say you had a $10,000 account and you were willing to lose 2%. You need to split it up because you're potentially going to be entering this on 3 separate occasions. Again, it's confusing to explain. It's for another video. That's why I have set it up like this, to take the loss and enter again down here. Tight stop loss, take the loss and enter again down here. Because this is going to reverse at some point. It's at a 52-week low. So I hope this video has been useful. Again, watch last week's video on all those setups of all those screenshots that we showed you, and you'll see that every one of those actually went in the direction that we said. So there was 1, 2, usually I only get 2, 3, 4 of these, so this was unusual. Last week we had 1, 2, 3, 4, 5, 6, and I think there was a 7th. So that's the reason why this week we've only got 1. So until the next time, please stay safe.